Because I can tell you, talking to global investors, across Middle East, Europe, of course, US and Asia, you're seeing more and more money flow from China tech to stalwarts, the Alibabas, the Baidus, and others, to US tech. Because the crackdown, the scale and the scope from Beijing is really historical. And right now, I cannot look an investor in the eye to own Chinese tech because you don't know what's going to happen 24 hours from now from a regulatory perspective. That's another tailwind for US tech as we go into 2022. But I do think it's important because when you look at Tesla and Apple in particular, China, that's a huge part of the bull thesis. So that continues to be, I think, in the sort of the shadows, one of the worries as investors look down the road, as Beijing continues to crack down more on tech with that regulatory slap on the wrist.
Now, I wanted to talk about chips as well. We've obviously seen a couple of re-rates to the upsides for the likes of Broadcom, for the likes of NVIDIA and the like. And you flag the prospect that we are going to see a little bit of an easing in that supply disruption. But do you think that there is going to be any kind of tangible material benefit for the likes of Apple on the back of that? Or is it just something that's already baked into the cake when it does come to their price, just in that respect alone?
Well, I think, okay, so first off, from a moderation on the chip shortage, I mean, what we're seeing from our check, even over the last week, a moderation by the February timeframe, especially February, March. That's important because that headwind goes to a tailwind. You look at Apple right now, demand's outstripping supply by about 15 million iPhones. So that now starts to be that pent-up demand that ultimately is going to elongate the cycle for iPhone 13. Yeah, and then you look at Apple, which could break ultimately 3 trillion, maybe even tomorrow or this week. I think that's why that stock continues to get re-rated. It's because of that cycle on the iPhone is underestimated by the street, but also that services business, the monetization. We think that services business is worth 1.5 trillion. But that chip shortage, that's going to be a tailwind, not for just for chip players like Marvell, NVIDIA, and others. That company in Cupertino, Apple, is going to be a major benefit.